Oil and gas have been the headlines all throughout the week since the U.S. government and the Israelis attacked Iranian facilities. That continues. And, well, we've seen particular, impressive performance in the oil and gas index so far this week. I mean, I think even stretching back to last week, but we're just looking at this week. NGX, oil and gas index, you can see it on the screen there, 4.68% Monday, 4.5 Tuesday, Wednesday, 4.4. Likely to continue today. We'll see what happens in trading. But what does that mean for oil and gas stocks? Should you buy them? What should you ask yourself before you buy them? We have an excellent panel with us. Muktar Mohammed, CEO of Finance with Muktar. Samuel Aladegbaye, who is an associate with Zedcrest Wealth. And Prosper Olusola, who is a research analyst at Afrinvest Research and Consulting. Ladies and gentlemen, you are all welcome. Thank you so much for joining us. All right, as my producer said, let's dance. All right, so Muktar, let me start with you. Were oil and gas stocks attractive before this war kicked off, in your view?
Well, they were. If you look at the numbers of the three oil and gas sector that you just mentioned, the three men, Oando, then Seplat, then Aradel. Yeah. Remember, before even this crisis came up, Aradel was already selling all-time year high of about 198, 1,100 and 1,098, and that was the price it was talking about. Seplat was already in the 8,000 naira stage, 9,000. I think the only slow movement we saw was Oando, and that also could be explained. Remember, they are also having a right issue. Yeah. So when you look at that, you're not surprised. There seems to be those stocks that are really tick the market because of the crisis. And why is it like that? Is if you look at these three stocks, Oando, you look at Seplat, and then also you look at Aradel, you realize they are a complete oil company compared to the lack of, you don't see those numbers in the lack of Total, Eternal Oil, and Corn Oil, because those are marketing arm. Rather, what you will see there might even be a negative, because now with the price of crude high, and if you look at most of these companies that I've mentioned, they depend mainly on importation of refined petroleum product, and with that price hike now, definitely it will affect their output. But for these three stocks, they are the one that ticks the market, because we are not expecting that by virtue of the high price of crude, it will begin to toll on their bottom line. Okay. Samuel, how have you felt about oil and gas stocks prior to the war on the NGX?
So, like for the upstream names, the Aradels, the Seplats, and the one that was placed in that space, I've been a bit cautious, right? Still in line with what Mr. Muktar said, the fundamentals are very strong, but the trajectory for oil prices, which is actually what they sell, which is a very significant contributor to their revenue, right, has not been that great. You've been facing the fact that most OPEC players are now trying to regain market share that they had lost when they were taking some outputs from the market, and the trajectory for oil prices in 2025 and 2026 actually was not that great. I mean, low 60s, some even saying the high 50s coming into 2026. So it wasn't that great, but obviously the fundamentals, like he also talked on, integrated oil and gas businesses like Aradel, also the fortress of a balance sheet that Seplat has as well, give them a very strategic position to actually weather that storm, and possibly when we get towards the mid-$70 per barrel, which is the normal rate for oil, should typically pick up. But what we've seen is that the speculation has really driven market performance, in addition to the fact that there's been consolidation with a lot of these names. And an interesting thing that I also noticed or observed is the way the market has traded recently. When oil prices surged right to $80 per barrel, you saw the investors really started taking those positions, speculative trades, on the fact that this might persist for longer. But when oil prices were pressured, you didn't really see that sell-off in a lot of these names. So that just shows that maybe there was a little dislocation at some point in terms of the fundamentals and what was actually going in technicals with the actual oil prices. So I was cautious around the volatility.
Great. So Oga Muktar, he's bullish, you're cautious, so you need to be negative. We want disagreements on this table, throwing the laptops and phones. But perhaps, how have you felt about oil and gas stocks prior to the war?
So prior to the war, the oil and gas stock has been, it's taken it just provided re-entry opportunities, right, for the investors. Yeah. Now, I'm going to provide you with a bit of numbers. Fine. Looking at the performance of the NGX oil and gas index, you saw that it fell at about 2%. When you compare it to the trailing, which is the NGX ESI, you saw that it's performed at over 50%. Right. Now, when you look at the trailing fundamentals, that's the P ratio, you see that the oil and gas last year, 2025, it traded at 9 times. When you take the 3-year average, you see that it was trading at a multiple of, say, 20x. And also when you take the 5-year average at 10x. So within the space of last year, you saw that we could see that it provided a bit of re-entry opportunities for investors to begin to, see what is really going on into this, going on in that space to really, take profit off the back of, do you understand it? And I believe it provided a compelling opportunity for investors within that space. So yes, prior to the Middle East crisis, there was already like attractiveness within that sector. Like case in point, the trailing multiples I mentioned earlier. And then when you look at, say, their earnings expectations, right? We saw that investors began to, price in that expectation, looking at how the new growth triggers, we see consolidations, mergers, and we see how that investors really did see that, post and pre, what's it called, pre the tension. But currently, we see that now the P ratios for the NGX oil and gas index now is actually at the premium of, say, over 76%, which just begins to show that, okay, maybe investors are beginning to be, cautious as we see how, recent activities from the events of the escalation, just how it unfolds and what impact it has on the market. So, yeah, by and large, it's...
Okay, great. So let's get into the names. I guess we'll start with Aradel. You know what I was going to do? I was going to do buy, sell, hold cards and then have you all hold, buy or sell or hold. But Muktar, how do you feel about Aradel?
Well, I think Aradel, what we are seeing is that the investors are pricing into the future of Aradel, definitely. If you look at the numbers, again, you look at their dividend yield and altogether, it doesn't look like it's supposed to be where it is. But definitely, like I said, investors are pricing into the future of Aradel. And Aradel, if you look at those, the business model with the kind of acquisition they've done, Renaissance energy acquisition, all that, coupled with the improvement in terms of performance, if you look at their result before now. And investors are still expectant of their board meeting to see whether they are going to pay dividend outside what they've paid in terms of interim dividend. So a lot is still in Aradel, but again, it's tied to that Renaissance energy issue where they are now controlling over 84%. So that gives them a lot of room for improvement, and also we'll see those numbers play a role, especially this high crude price play a role. What is happening in the market sometime again is the bandwagon effect that I always talk about, whereby you see a particular stock is out of reach and then you look for the next big one. So a lot of investors are pricing into the next big move. They feel that move is in Aradel.
I remember you used a bus stop analogy now. If you miss the bus, you can catch the next one. Samuel, how are you feeling about Aradel?
I mean, pretty much in line with what he said. I think the fact that they've integrated, or they have now completed their acquisition with ND West and gives them a stronger foothold on the industry. They can capture a lot more of the value chain. I mean, they're already integrated, but now they're just expanding, their asset base. So I think that's also very strong for them. And relatively speaking, if I'm looking at, the returns that they give in terms of average equity and assets, they actually do better than their peers. So of the three names, I'll say that's one that I'm also kind of...
You're nodding, so I think you agree as well. Samuel, thanks.
All right, so just hinging it on what he has said. Yeah. When you look at Aradel's themes, it centers on efficiency, it centers on asset growth, and then centers on diversification. Yeah. So we see diversification in other subsidiaries, other businesses they do, right? The gas and renewable energy and all of that. Then when you look at efficiency, looking at the numbers, the recently published full year 2025 numbers, we saw how that, net margin was really, really robust, parts over 50%. Do you get? So it just tells a story of how efficient they are in their operations. Their reserves increasing, which just shows how much pricing would really do for them if they lift up more volumes. Do you get? So by and large, yes, given the themes that Aradel operates on, I believe it's a solid one for them. Post the whole acquisition and all of that, investors are just waiting to see how they sweat their assets. Looking at amongst the three pairs, Aradel has the best, return on assets as well as return on equity. Return on assets has over 6%, and then return on equity over 16%. So it's a good story for Aradel.
Okay, so all three of you are on board for Aradel. All right, up next, Seplat. So how you? I'm guessing, I think I know what you're going to say, but, but go ahead. What are your thoughts on
this my thought on Seplat. It's for the big boys. I mean, I think we are almost 89,000 now in Seplat. And that movement started when the big man himself decided to buy X Energy, decided to get in there.
They got in at It was 5,000 when it got in December 31st.
You can see why, and I think Seplat is largely driven now these days by institutional investors, not by retail investors. And then when you talk about institutional investors, you are looking at people that are also looking at the long term of that stock. So price stability, we'll continue to observe it at that point. And again, the availability for retail investors is going to be a challenge, because these institutional investors want to hold it, because it takes me to buy 1 unit of Aradel, I have to cover 10,000 naira. So I you know what I talk about it.
You mean Seplat?
Seplat. Seplat is for the big boys. And so, but if you want to feel among, like a retail investor, you don't want to feel among, then you just look to buy that maybe 100 unit or 500 unit. But for me, I'm not. If I'm not in Seplat before this movement, and I don't have that deep pocket, I'm not an institutional investor, I'm not a pension fund administrator, I won't be going for Aradel. I won't be going for Seplat. Definitely not.
What was Seplat's IPO? Wasn't it 350 naira back in 2015?
Yeah. So you can see those movements. So that is the challenge. That's what people are not seeing. In Aradel.
You keep saying, you really, Aradel is on your mind.
No.
Oh, sorry, you mean Aradel now?
Aradel. Okay. That's what people are beginning to see.
Right.
That IPO of 350. Remember, their own was 850. By listing. And then they moved to almost 480, 420 before we saw that price movement. So what you are seeing, that's what some retail investors are now going, and that is also responsible for the kind of movement and the volume you see in Aradel, is that we need to catch the next big box.
Gotcha. Samuel, what do you think about Seplat?
So, it's an interesting one. And, I think for Seplat, if you look at he has already covered the technical, so I'll just try and stick more on the fundamentals, right? I think the largest longer-term growth opportunities in the gas segments, right? You're seeing the annual gas processing plant coming online. That's a joint venture with the NLNG. And I think that, it fits broadly in line with Nigeria's decade of gas initiative set for 2030, right? In terms of tax benefits and the likes. And tax has really been a significant drag on their bottom line, right? Sometimes paying up to 80%, right? In terms of the reported figures. So, I think the long-term trajectory for Seplat is, in terms of the fundamental side of things, is that it's broadly, in terms of what we're seeing in terms of policy implementation in Nigeria, I think it broadly fits in line a little better than Aradel due to that decade of gas initiative. Gas is also a more stable commodity relative to crude oil, right? So that might also give some earnings stability as well. Going into the next 5 years, right? So I think that's also one thing that plays. And in terms of the opportunity, you don't really see that much swings because of, like you said, 10,000 naira. Not that many people can participate in that stock. But if you look at the value, right, they do virtually about 6 times the production capacity of Aradel. But right, as we currently speak, it's valued at less than that, right? So I think if they really unlock that value, right, there's a lot more that can really go on in that stock. Maybe potentially, if we even see them initiate a stock splits, right, you might see some more liquidity in that stock and it might really take off again.
All right. Proso, how are you feeling about Seplat?
So yes, I share the same sentiment. However, we need to, just like Muktar said, it's 10,000 naira for a retail investor is a lot. However, we see that Seplat has what I say it's a legacy company, so it's ongoing for them. And also, the 3, oil and gas themes in the EP, that's the upstream segment of Nigeria, they are really institutionalized, indigenous owners. So it's something that we look forward to every investor within the community, like Nigeria, wanting to, own a path or a share of the whole cake, right? But however, when he said that, okay, a major way for growth for them is maybe looking at the annual gas joint venture that they just started production. But then you look at it that there's potential. Right. Or however, there are still, on the flip side, risk challenges. Looking at the location, one, yes, it started giving off to an Indorama. But when you look at it, it's just within a particular geopolitical zone. We've not been able to, address the problems, the challenges, with vandalism, theft, and all of that. So if you're going to also create value out of that value chain, how do you sustain it such that it gets to the end user, people that are using it, and also you recoup money for your investment? So by and large, yes, Seplat rather makes a very interesting case, but we also have to look at how we fully optimize value from that end.
Good point. Very good point. All right. Last, certainly not least, Oando PLC. Sam, I know you don't cover it, but if you want to chime in, feel free. It's not part of your coverage. But Oga Muktar, how are you feeling about Oando?
Too much potential, not yet being enjoyed by investors.
Yeah.
You see, the first time they came in, that Ajib deal was a big one. Remember, the Coconut Phillips didn't go well.
Yeah, that's
but
right.
You have to salute the courage of the management of Oando. Because after that Coconut Phillips deal went bad, you would have expected that they wouldn't take any large ticketing deal again.
Yeah.
But they went to that Ajib deal, and also we're beginning to see the numbers beginning to play out. And we're beginning to see in terms of production, in terms of improvement, capacity improvement, and point down to their numbers. But there's still that challenge of liquidity in terms of turning those assets into a good product that also will benefit investors. There's still a challenge there.
Yeah.
And that's why I think they are coming in for the right issue, so that they don't start going so much into the borrowing aspect of it, trying to borrow so much money from the bank to begin to. So that has always been the challenge. So they're trying to get until the right issue, and at the current price now. A lot of investors are beginning to ask the question, do I have to buy it at 50 when I can get it in the market lower?
Yeah.
So that tells you that what we're going to see is what we normally see. When you see pricing like that, they are pricing in the cost in the future. So retail investors will be the one to position to say, look, I'm going to buy it from the market. While the institutional investors are looking at the long-term future, and they are already keen into it, I would definitely tell that most of what Oando is going to do is that most of the retail investors might not be taking their right, but the institutional investors want to take their right. Because if you look at the Oando story, and then you look at the structure, the story they want to be, it's going to be a Nigerian story. And again, if you look at the scaling they have done, getting out from areas that are very competitive, like the downstream sector, exiting that sector because of cost of sale, and you realize that they have the strategy. So now what investors is, we want to see those strategies begin to turn to numbers and then begin to see that share value. Remember, last year is one of the best performing stock in the market.
That's right.
So definitely this year, I still think there's a lot of value here. What you are seeing again is the bandwagon effect. Investors are beginning to say, look, I can't get Seplat, I can't get Aradel, but I can see a potential in Oando.
Okay. You want to hop in or
yeah?
Okay,
Phil. Let me just mention a few things. So on Oando, I mean, like he also said, a lot of potential, right? I think of the three upstream names, it's valued at just under $1 trillion, right? There's a lot of potential out there. It's how to unlock that cash flow, right? And if you look at the stock performance from just about a year ago, it's actually down about 20%, even though year to date it picked up because of the speculation, like we talked about. So I think if they're able to fine tune that over the next few years, right? In terms of even analyst coverage as well, I think that also broadened how many analysts are also interested in looking at the stock and also just fine-tuning other things around the company.
All right, Prosper, what's your thoughts on Oando?
Okay, just like they said, or riding off the back of what they said, Oando provides a compelling case, right? But you begin to see, just like when you say for an investor, what are the things you look out for in playing in this space? You look at fundamentals, you look at numbers, beyond just what top line did, beyond what bottom line did. When you look at the balance sheet health, when you look at how does this translate to real value for investors, we begin to see that there are a bit of nuances. So for Oando, for them to really gain that investor confidence, you really need to get onto the drawing board and try to. They are currently going a reconstruction or strategic phase. They're trying to reconstruct all the debt and everything. So I believe once that is done, it will just provide a clearer picture as to where they stand on what investors should begin to price it at.
All right, good stuff. We've only got, I think, about 3 minutes to go, so we're going to give you all a minute. I just wanted to get your thoughts on the Dangote refinery raising prices of PMS and diesel. It sounds like it's a no-brainer where things are, but I want to hear what you all think. Well, we're going to talk real quick. What are your...
It's a no-brainer, like you have said. Again, we also have to see that it would have been worse. I mean, which if not for that deal that you have, the naira to dollar deal, it would have been worse.
Naira
for naira, but whatever they call it, it would have been worse. So for me, it was a no-brainer. And also, these are what happen if you have a stock like Dangote listed in the exchange. At that, and I mean, with that announcement and everything you see. So for me, it's a no-brainer. But also, we have to commend the government for that deal. Otherwise, I heard your analyst saying we could have gotten to 1,400. I beg to differ a little bit. I don't think we'll get to that because of this deal. Even if we don't know so much about what's the fixed exchange rate that they are doing with the government. But I think that is what has brought the price to where it is. You look at the major operations. I mean, that's the major, is that what they call them? Oil major. Yes. They are really going to have a challenge because they are really importing this thing. And when you look at that 25% in terms of margin now, I think they will be struggling to even make profit on their own end. But I think it was a no-brainer.
Samuel, what are you?
So, yeah, I mean, it's the rise to 874 naira per litre, right? I think that even with that, we're still insulated from a lot of the shocks that we're seeing globally. Because, you know, prior to the previous regime where we were actually importing refined products, you would be paying for insurance costs for passing through, you know, these passageways, even with the geopolitical tensions, and that would potentially have bumped the price up another $50, 50 naira. Sorry. So no problem. I mean, the key risk to this is that, you know, this geopolitical tension stays for longer, and that starts to creep back into inflation, right? Because at the end of the day, people were actually feeling this thing. The first day we saw panic buying across the whole Nigeria, right? And, you know, if this continues to persist at 934, potentially, if it actually even worsens, some analysts are saying that a price per barrel could go up to 100. That could just put us into significant territory, not just for Nigeria, but for the globe again. And that could that now shift the stance of most central banks to a more hawkish tone, just to try and curtail that, right? So I think that's a key risk, but I also want to just acknowledge that we're actually insulated from all those shipping freight costs that would have actually paid for shipping these refined products in a period of time where there's geopolitical tensions. Yeah,
Dangote refinery has been a huge asset to this country. Prosper, I think you might get the last word. What's your thoughts on the pricing?
Okay, so, you know, in the oil and gas sector, we have the upstream segments, we have the downstream segments. Yeah. The upstream segments, it's a bullish case for them because, you know, prices are going high, my production, I get more money from it. But for the downstream guys, they get the refined products. And if the is selling at the higher price, if cost is already high, you know, getting it is also on a higher price, which will also trickle down on, you know, the end users as a retail user. So I think it's just a question of, you know, cost margins, how they want to really contain what's it called now, the pressure on both, you know, the owners, that's the company, that's Dangote, as well as, you know, the end users. Yeah. So by and large, we're looking at this just being a short-term pressure.
We hope.
Looking at it being a short-term pressure. So the 1-4 narrative, so I don't really agree with it. So I'm looking at it between, say, 1 to 250. Okay. About, yeah.
Prosper Olusola, research analyst, Afrinvest Research and Consulting, Samuel Aladegbaye, associate at Zedcrest Wealth, and Muktar Mohammed, CEO of Finance with Muktar. You three have been incredible. You've been incredibly informative. Thank you so much for your time. And that's the end of the show. You took us to the end of the show. Thank you so much.